Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about how I traded a few Bitcoin stocks the last few weeks. Okay, simple setups with simple indicators. I talk about all this stuff in my Masterclass, which is available at the link below this video. Trading doesn't have to be complex. In fact, I'd say the more complex something is, the more full of it the person likely is. A simple system that works and can be repeated is all you need. All right, so let's go through a few stocks that I traded. All right, so here's BTBT, okay? So this was on my radar, but I had absolutely no interest trading it because it was just like down, 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 down. I think it dropped like 13 weeks in a row. And then out of nowhere right here, it jumped like 100% one day on huge volume. That kind of brought the stock back to life. It kind of jerked it out of its downtrending ways. It put it in play, okay? It followed the big up day with a big down day, and then you can see here it settled in with quieter and quieter action. We had a big up day here, a smaller inside day here, an even smaller inside day here, and then you can see it broke out. It formed resistance at 9.5. It broke out and it more than doubled up to 20. Okay, so let's zoom in with a couple intraday charts and see how what I saw, what I was looking at as the stock unfolded. Okay, so here's the 2-hour chart. I want to highlight a couple of developments that I look for. One is what I call my my kiss and cross trade. So you get a cross here from the MACD, you get a cross here from the stochastic, and then what happens is you get the MACD moves up and then comes down and kisses. The MACD moves up, comes down and kisses. The MACD moves up, comes down and kisses. And each one of those kisses coincides with stochastic cycling down and then crossing back up. Stochastic cycles down, crosses back up. Stochastic cycles down and crosses back up. Okay, so the kiss here happens at the same time the cross here, which is why I call it my kiss and cross trade. Okay, and each one of those can be an entry. As you can see here, we get support at the 21, and then we have support at the 8 moving average, 8 moving average, 8, and 8. Okay, so this is the 2-hour time frame, kiss and cross trade between the MACD and stochastic, and then you can see the support from the 8 as the stock moved up. Now let's zoom in one more time frame to the hourly chart. So one thing I just want to highlight here is something that I call my my moving average handoff. It's what as a stock trends, when a stock trends, as it accelerates, shorter and shorter moving averages will support the stock. Okay, so you can see here you have the 21 supporting it, the 21 supports it, the 21 supports it, and then as the stock accelerates, you get the 8 supports it, the 8 supports it, the 8 supports it, the 8 supports it until it falls off. Okay, so first the 21, then the 8. I call it my moving average handoff. This is also another setup or development that I talk about in my Masterclass, which again is available at the link below the video here. Okay, so good stock in a strong group, trended up really strongly for like 2 weeks. Treated us really well, very, very playable, and dare I say a little bit easy to play, especially relative to a lot of the false breakouts we were getting at the same time. All right, next up is Bitfarms. Okay, again, weak stock, trending down, nothing overly exciting. Out of nowhere, it jumps right here. Okay, moves sideways for 3 days and then jumps again. This big jump right here happened on the exact same day that BTBT jumped. So stock jumps, okay, moves sideways for 5 days, gets support from the 21 EMA, forms a resistance level up here, connecting, going backwards, and then as you can see, it breaks out, has 1 day to test, and then it takes off and does extremely well. All right, so let's zoom in with this chart and see how or see what I was looking at as it developed. So again, here's the 2-hour chart. So a couple things I want to point out, we have support at the 21, support at the 21, support at the 21, and then we get support at the 8, and then it rides the 8 all the way up. Okay, again, moving average, what I call moving average handoff. As the upward movement accelerates, shorter and shorter moving averages will support the stock. I talk about this in my masterclass. Another thing I want to point out, once a trend develops itself, the stochastic operates as a timing mechanism within that trend. Okay, so once this starts moving up here and gets support from the 21, stochastic cycles down, offers a buy area. Stochastic cycles down, offers a place to buy. Stochastic cycles down and offers to buy. Okay, so while the trend is up, the stochastic is a timing mechanism within that trend. Okay, next chart will be the 1 hour chart. Okay, and this is, I just want to highlight the moving average handoff that I've talked about in just briefly. Okay, so here's support from the 50. Then as the stock accelerates a little bit to the upside, we got support from the 21, support from the 21, support from the 21, and then as it accelerates even more, you got support from the 8, from the 8, from the 8, and trying to get support from the 8 here as of the time that I took this chart. Okay, while in a trend, as it accelerates, shorter and shorter term moving averages will support the stock. All right, so again, another good one. It was brought to life with the first big move up, moved sideways, and then it, was a relatively easy stock to trade because although it was kind of volatile, it moved very orderly. Indicators worked well, moving averages worked well. All right, next one is CAN. Okay, decent basing pattern. Was on my radar. I'm not going to play the first move. Whenever it comes to a bottoming pattern, I always let the first move happen, let the stock prove itself, and then once it gets going, like the second move, then we're all getting involved. So we have a bottoming pattern here. We got resistance at 7. So it pops off a bottom here on strong volume, but then it gives it back. It pops off a bottom, pops off a bottom here on strong volume, gives it back, and then it pops off the bottom there on strong volume. And this time it closed above the last couple weeks of price action. It hesitated for 3 days there, and then it took off and did very well. So let's zoom in with some intraday charts. So here is the 2 hour chart. Okay, so you get a cross here and a cross here, and notice the MACD comes down and kisses and comes back up, comes down, goes below the signal line briefly, and then comes back up, comes down and kisses, comes back up, and then it comes here and then comes back up. Okay, and so each one of these kisses, boom, 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 this stochastic cycles down and re-signals, it cycles down and recrosses up, cycles down and crosses back up here, cycles down, and you can see it did it twice here and here. Okay, so while a trend is starting to develop, and as it gets going, you get a kiss with the MACD and a cross with the stochastic. Okay, and again, something I talk about in my masterclass. All right, let me erase those and just point out, at first we had support from the 21, 21, 21, 21, and then as the momentum started to build, you got support from the 8, 8, 8, and on up. Okay, now let's move on to the hourly chart. All right, so here's the hourly. This is going to get a little redundant, but that's okay. So you have support from the 21 as it gets going, support from the 21, 21, 21. Okay, so we obviously have a trend up here, and then and notice that while this trend is playing out, you get pretty good signals from the stochastic as it cycles down. Pretty good signal here when it crosses below the 20 line and moves back up. Pretty good signal here, pretty good signal here, pretty good signal here. This is kind of messy. Okay, so you get a lot of herky-jerky movement, but once a trend establishes itself, each time the stochastic cycles down, that operates as a timing mechanism within the trend. Okay, another relatively easy setup to trade, again, especially considering the lack of good setups we had at the time. All right, so overall, to make it in this industry, you don't have to be a jack of all trades. You can clearly define or identify a single setup that works and that kind of clicks with your personality, then you can practice that one setup over and over and get really good at it. And then you're set. Okay, you don't have to know everything or get good at everything. I talk about this in my class. I also talk about getting a bias from a longer term time frame and then zooming in with shorter term time frames to get entries. Check it out. The class can be a game changer for you. One good trade pays for the class, and then of course you'll have thousands of good trades after that. All right, thanks for watching, and I will see you next time.